The new CPI data announcement has just come in via Fed Chair Jerome Powell, and this was a very big announcement. This one stock category in the stock market is going to explode in the very near future. And we heard earlier this month that inflation has died down a bit, so there was no surprise there, but we also have heard that inflation is not the only metric tied to the decisions affecting the Fed rate. The United States has been through some craziness over the last week or two, with former President Donald Trump being shot and current President Biden pulling out of the next presidential race. Elon Musk says that America is heading towards bankruptcy. 356 companies have filed for bankruptcy this year, higher than in the pandemic in 2020, and is higher than any comparable figure in the last 13 years. 52% of Americans said the United States is too expensive to live in, per USA Today. At least the announcement today was a bit more favorable than all that, but it's important to keep all of this into consideration when we're looking for the next great investment.
Start this hour with that breaking news on the economy. It's news that could have big impacts on your wallet.
The Federal Reserve just announced it is holding interest rates steady for a full year now. The benchmark rate has remained at a 23-year high, but the Fed is hinting more than ever that a cut could be coming soon, just not today. Joining us now with the very latest is NBC News business and data correspondent Brian Chung. So Brian, this is not a major surprise, right? You have been sitting here telling us for months that an interest rate might happen in September. I don't think you ever said in July. Is that still the thinking?
Yeah, and by the way, that next meeting is going to be the next time we'll get a decision. So it seems like, yeah, it might not be long from now that we'll get that interest rate cut. But again, on the calendar, we're going to be looking at least another 6 to 8 weeks to get that. Now, when it comes to the announcement that just dropped about 2 minutes ago, the Federal Reserve saying that it has not has not cut interest rates. It's keeping interest rates where they are right now, but that they've seen some signs of progress. So I'll read you exactly what they said. Quote, in recent months, there has been some further progress towards the committee's 2% inflation objective. And the reason why I bring that up is because that's been the big story in this economy, the high price tags that we've all been noticing at the store. Now, the Federal Reserve has said, all right, well, with the rate of inflation coming down to somewhere closer to around 3% as of some recent measures, again, compare that to about 9% in the peak of the summer of 2022, that is good progress. But the Federal Reserve has been saying, why has inflation been going sideways? It's been seemingly hovering around 3% for basically the entirety of 2024. There have been other readings that have been more encouraging to them. This statement that they just released seems to codify that. But again, they're saying very clearly that the committee does not expect it will be appropriate to reduce the target range, aka a cut, until it has gained greater confidence. Can they get that by September? That's what we're going to be watching for.
Now, very important is to look at the rate and inflation chart. We can see that CPI, core CPI, and the personal consumption expenditures index all went out of whack, making inflation soar through the roof. Then that black line is the Fed rate, and you can see that once we raised that rate, eventually all those other lines started to fall, and as the Fed rate increased and stayed increased, those other numbers dropped and are approaching that dotted orange line, which is the Fed inflation target. Since we're heading toward that dotted line consistently for months now, we can expect a rate cut soon since it has done what it's supposed to do. If inflation dies down to the regular average, we don't need Fed rates up so high and can ease that burden. Knowing that the Fed rates will likely be cut very soon, and then continue cuts over the next year or two, one stock category is going to go through the roof because of this. But first, I want to thank and introduce sponsor of this video, Land of Land, which is America's premier land wholesaler. Looking to diversify your portfolio? Consider Vacant Land. Including land assets can help spread risk across different asset classes and hedge against market volatility because, as you know, land is a limited resource. I like this as an option for investing, but I also like this as an option for someone to be able to buy land and then be able to build the house of their dreams for later on. Land of Land streamlines the buying process, keeping costs low and transactions quick. You can even handle everything remotely, often in just a day. Go to this link to register for their next auction at landoflandauction.auctiontex.com. The link is found down in my description, and be sure to enter code PROFG, P-R-O-F-G, to receive a $300 reduction on your total invoice on land you win and purchase through its auction. As Mark Twain famously said, buy land, they're not making more. So the one stock category that's going to increase the most, in my opinion, is going to be one that has to do with something that's very variable and has to do with what happens when the Fed rate goes up or comes down. So it's very contingent on that actual rate. And that would be anything having to do with real estate. Investing within the world of real estate is very solid and there's a lot of great options, but one of my favorites is called a REIT. REITs have crazy high dividends, so you can live off passive income with these, and they let you invest in real estate without needing hundreds of thousands of dollars. I recently did a video of 5 of the best ones over the next year, so I'll link to that and queue it up for you to play right after this video. If you want to live entirely off of passive income and replace your full-time job with just passive income, you're going to need to find assets that produce a nice sustainable, long-term, but also large dividend. And many of these REITs produce such high cash flow, so they can give 7, 10, sometimes 15% dividends. If you have $1 million and you want to live off passive income, but the stock only gives a 3% dividend, that's only $30,000 per year. If the stock gives a 13% dividend, like the REIT Blackstone Mortgage Trust Inc., BXMT, you'd be able to earn over $130,000 per year completely passively. That would replace a full-time income, and you get to just sit back and collect a check.
We have made no decisions about future meetings, and that includes the September meeting. The broad sense of the committee is that the economy is moving closer to the point at which it will be appropriate to reduce our policy rate. In that, we will be data dependent, but not data point dependent. So it will not be a question of responding specifically to 1 or 2 data releases. The question will be whether the totality of the data, the evolving outlook, and the balance of risks are consistent with rising confidence on inflation and maintaining a solid labor market. If that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September. So you asked why not today, and I would just say, again, that the broad sense of the committee is that we're getting closer to the point at which it will be appropriate to reduce our policy rate, but that we're not quite at that point yet.
When the Fed does finally cut rates, expect REITs and other real estate style assets to just go through the roof. So right now, buying them on sale is the ultimate cheat code. To watch my video on the top 5 REITs over the next year, watch it right here, or watch this one to keep you going strong in your investing journey.